Welcome to Live Sessions presented by HDFC Life in partnership with ET Now. I'm Pooja Jain. Now, life is a journey full of aspirations and responsibilities, from building a career to securing a family, from managing businesses to preparing for retirement. At every step, financial planning plays a critical role, and at the heart of the matter lies one constant: the need for protection against life's unforeseen circumstances. In this special conversation, we'll explore how guaranteed return products and innovative insurance solutions are helping customers. Joining us today are two leaders who bring complementary perspectives: Mr. Pankaj Sood, Executive Vice President at DCB Bank, and Mr. Vikram Vaswani, Group Head of Key Alliances at HDFC Life. Together, they'll share how banks and insurers are working hand in hand to deliver security, stability, and financial preparedness for India's diverse customer base. Gentlemen, thank you so much for taking the time to join us in studio on this special episode of Live Sessions.
Thank you, Pooja. In fact, my compliments to you and Vikram for arranging for this capsule for insurance awareness. Yeah.
Well, we're here to do a bit more of a deep dive, right, Pankaj? And I'd love to kick off the conversation with you. In your professional capacity at DCB Bank, you obviously deal with clientele from all ages and stages of life. That said, from your experience, to what extent is life insurance essentially the foundation of their financial planning effort, exercise, and aspirations?
Well, Pooja, as a bank, and when I'm talking about DCB Bank, we are in a sweet spot. In the sense, you spoke about conversations. So when you're talking about the individual, basically we are addressing three needs. One is a surplus need of the customer, and there you go with a normal savings account or a fixed deposit, right? Then we are talking about the deficit needs. If you need a home loan, who else you go to? The bank. Whether it is a business, you want to run your business, so that's a deficit need. Third part, which is a critical one, is the protection needs or long-term needs. Now, why I'm saying that we are in a sweet spot as a bank, because in one conversation, when we are sitting with the customer, all these aspects can be discussed. Sure. So not only you are addressing one part of the need in a conversation, but you are steering the conversation towards the long-term needs of the customer.
By way of a holistic approach.
Holistic approach, that's right. And that's why I feel that, as a bank, we are in that sweet spot where we can do that conversation much better. We can explain the context especially on the insurance side much better, and we can make the customer understand why it is so needed.
Right. Well, Pankaj, thank you for setting that context. I want to build on some of your observations now coming to you, Vikram. Pankaj just brought up saving products a moment ago. And India has, for better or for worse, long been characterized as a nation of savers rather than a nation of investors, per se. Correct? So within the life insurance product portfolio or basket of solutions, what are essentially those products that perhaps provide the same sort of stability and predictability that savings products typically do?
So thanks Pooja for the question. I think to what Pankaj said and like you said, I think yes, India is traditionally known for being a savings economy, and I think the habit of savings is inculcated in every Indian. That's what we thought when we really grow up in our life. So insurance, like you said, has various products. Okay, they are market-linked products, they are traditional products, there are also annuity products, health products that we have. But coming particularly to the traditional products, okay, there are two types of traditional products typically that most companies have. We call them as participating products and non-participating products. What we really mean here is participating means participating in the bonuses and profits of the organization, but most of these products are partly guaranteed. So what happens in insurance is the moment you buy a policy and the policy is issued, the sum assured becomes a guarantee. And then whenever bonuses are declared by the organization every year by the insurer, that becomes the next level of guarantee, because once bonuses are declared, they become guaranteed. You cannot reverse, unlike a market which can go up and down. Parallelly, we have something called as the non-par products, non-participating products, which are essentially guaranteed products where benefits are defined upfront, right at the initial stage. You exactly know how much you're investing, and you exactly know what is the maturity benefit that you're going to get, right? So, now non-par is a product category specifically that we really offer to a lot of customers from DCB Bank, and what it helps is it brings in a lot of stability, like you said. You exactly know how much you're paying, what you'll get back. There is predictability of cash flows, and that really helps a section of people who who don't want to take risk, who have low risk appetite, and who want predictable outcomes, right? Even if you look at the global macro, we are in a volatile environment all the time, and given that these products, a part of the investment in these products helps you ensure that you get some kind of financial stability, predictability, right? And HDFC Life has done a lot, on this. We have a series called Sanchay series, which we came up about 5-6 years back, and that is our flagship series on the guaranteed product side. And under that, we have various options, right? And today, Sanchay has become like a acronym for guaranteed products in the life insurance industry, and I think many customers have benefited with it.
Well, thank you for sharing that. And building on that, I'll take it back to you, Pankaj, because, we just heard Vikram bring up global volatility. And I think you'll agree with me, it's an unprecedented time in human history. And if you look at the small business community, or MSMEs in particular, they've had an especially rough ride. Between, I think, demonetization, then came GST, then came COVID-19, then came the global economic, downturn. And most recently, all the geopolitical volatility that surrounds each of us. So that said, what are essentially the products or approaches that can better cater to the needs of MSMEs in particular, if they're exploring insurance, but they need to keep volatility just in mind?
Sure. See, two aspects to this, Pooja. What is the biggest challenge when we are talking about penetration of insurance, whether it is MSMEs, SMEs, or individual? The biggest challenge is the mindset.
In India, of course.
Yes. And what is that mindset is, insurance, even today, is considered as a cost. And that is where that is a challenge as an opportunity also. In my view, insurance is an investment, okay? While we are talking about, for example, covering financial security, you are basically protecting your money, right, okay, for all unforeseen future events. And you spoke about global volatility. Apart from this, when I'm talking about the investment perspective, one of the things which is a challenge and opportunity for us, at DCB Bank, HDFC Life, and all the manufacturers, is how do we communicate the aspect of asset creation?
Right.
Now, I'll just give you an example. You want to buy a house, for example, in Bombay, anywhere between 2-3 crores. Okay.
If you're lucky.
If you're lucky, yeah, of course. For the same asset creation, and most of the time, that house is being bought so that one is that, of course, for your own comfort, for your family, for future. When you're not there, your family will hopefully live comfortably. That same asset creation can happen by spending just 0.1 to 0.2% in a term cover. Sure. Same 3 crore rupees that somebody would invest in a house, in a second house, in a third house, that kind of asset creation can happen by spending, say, 20,000, 30,000, 40,000. Look at the way you can create assets. Sure. And the same money is available for the family if something to happen to us tomorrow. Right. Coming to MSME part, basically DCB Bank is a bank which caters mostly to self-employed customers. I want to share with you, these customers have amazing entrepreneurial spirit. Right. Amazing. They can run any businesses. You spoke about COVID-19. Look at the way they have changed their business models, the way they have again come back to the fore after all that happened in these 2 years. But one thing which is a bit of missing, they're not as conscious about covering the, transferring the risk, their business risks to the insurance company. Right? I mean, Vikram will be very, very happy to take on those risks. And those risks are, they're staring at your face every day. I mean, you talk about, all kinds of risks are staring at you.
The protection gap is huge.
Protection gap is huge. I think that is where we are adding a lot of value. We are very proud of the fact that because we only deal with self-employed customers. So both on the business side as well as on the individual side, we see this as an opportunity. We see this even as a social service from the bank's perspective. And we are adding a lot of value. To end the conversation, I remember during COVID, and we have many instances. I mean, Vikram would be part of those examples,
Sure.
where something went wrong with the key person. I mean, look at family got that so precious that money was, and they come to the branch and they are all in tears and they thank us as if we have done something. I mean, we have just done the right thing.
You financially protected them.
Yeah, we have protected them. I mean, look at the impact on that family.
Since you brought up mindset, a short while ago, Vikram, I believe when it comes to mindset, the overarching perception is that life insurance products generally work in the context of the long term, and benefits accrue over time. Yet if someone is looking to meet their more immediate expenses or change their quality of life in the present, to what extent can life insurance come to their rescue there? If you could shed more light.
Sure. So, Pooja, you've seen the way India is growing. Okay, we are about to, become the third largest economy in the world, and
Some reports we already
yeah. And so has the insurance market grown. The sector got deregulated in 2000. In fact, we are in our 25th year of existence. We just completed 25 years, and there's so much that has happened in these 25 years with so many private life insurance companies, trying to offer solutions, trying to create innovation, and that's how the sector has got developed. Now, you are right in saying that traditionally insurance was always known as a long-term product. That is why people stayed away from it, because you have to commit for a long term in terms of your premium payment, and also the maturity benefits come in a long term. Now, if you look at the way, like I said, the industry has evolved. Okay, if you look at most of the reports today, if you look at global as well as industry estimates today, India was the 10th largest insurance market by premium in 2022, and it's forecasted that we'll become the top 6th by 2032, right? I mean, with the penetration at 3.7% of GDP, right?
Largely led by the life insurance.
Yes. So, given this, there is tremendous potential, and given that there's so many companies operating, almost 24, 25 companies operating in India, including LIC. I'm talking about life insurers alone. And having said that, the market has grown. There is a lot of potential. Like you said, the penetration is, even if you look at per capita premium that we pay, we are just about $95, compared to some other developed countries, whereas the number is much higher.
Sure.
So having said that, there has to be innovation. You have to look at products which can cater to various needs. Customer needs really vary. So what insurance has seen, if you go back into 2004, is when unit-linked product got launched, and why they were such a big success was because they offered a lot of flexibility. The ULIP product. Similarly, what has happened today on the traditional side, like a non-par product that we are talking about today. Earlier in a non-par product, you paid a premium for X number of years, and then you got your maturity, say after maybe 10 years, 15, 20, whatever you chosen. What we have done right now is, on the non-par product side and even on the par side, we have started structuring products where you get immediate cash flows. Okay, and that is what it really brings in. There is guarantee, there is transparency, and there is a lot of predictability. And yeah, and you can choose, in terms of when you want these cash flows to come. They can start right from the next year after you have invested a premium. If you buy a monthly policy, they start the very next month, right? And that is what is helping, because every customer, depending on his own needs, can really prioritize and plan his cash flows. Okay, so our Sanchay series that I alluded to earlier, is a non-par product which gives you cash flows after a particular term, say 8 years, 10 years, what you choose. We recently, about a year back, we launched Click to Achieve. What we have done in Click to Achieve is, it's again a guaranteed product. You can actually customize your cash flows. Your cash flows can increase, to catch up with inflation. You can also decide at what stage in the policy you need a lump sum and how much is the lump sum that you want, right? So for example, if you have needs like, that your child is going to go for higher education, or he wants to start his own setup, or he has to get married, or any goal-based, events that in your life, you can actually customize this product. So your product would be very different than mine, and then, Pankaj's and anybody else's. So because our needs are very different. And that is where a lot of evolution has happened in terms of product design. To add to that, given IRDA reforms, etc., there are also flexibilities in terms of, earlier if you buy a 10-15 year policy, you have to pay premium for 10-15 years. Now you can choose a premium payment term also. Okay. Recently we had a change from IRDA where surrender values have been taken up. So just in case if you can't continue the policy, you ensure at least your money comes back to you. Largely the whole money comes back to you. So limited premium payment options, higher surrender values, flexibility of premium, flexibility of changing your cash flows. That has really helped, customize these products to your specific need, right? So that has really helped, and I think this is a good advantage, and it is changing this, impression about insurance, saying that's a long-term product.
Well, thank you for sharing that. And since you highlighted how customer needs are evolving, I need to pose my next question to you, Pankaj, which is essentially that you're in an especially privileged position, given that banks are typically, the first point of contact when it comes to customers seeking financial counsel. However, the challenge is you deal with customers with varying aspirations, risk appetites, right? And essentially needs. So that said, how do those conversations happen? How essentially do you come at what the right suggestion is for the customer in front of you, given the basket of solutions that exist?
Sure. That's the most difficult question so far, Pooja, I must say that. But reflecting back on your earlier question, if by chance, if you're looking for short-term needs, DCB Bank offers quite attractive fixed deposit rates.
Noted.
But by the way, how do we do this conversation? As I explained earlier, we are in a sweet spot. Two things which we have done, with HDFC Life and in fact with our partners. As a bank, from our strategy perspective, and I'll explain to you how it is related to what you are specifically asking. Whether it is about the deposit side or on the loan side or then on the protection side, how do we explain to the customer what is appropriate for the customer? And that is where we say that appropriateness. One of the key aspects there is simplicity. Okay. Now, there is nothing wrong with the variety of products which are there in the market. Vikram spoke about ULIPs, there are at-par products, and there's hundreds of variants. We specifically chose non-par products. Okay. Why did we do that? One, because it is simple to explain.
Sure.
Two, it addresses that specific need of the customer.
Right.
Okay. My personal view is, and Vikram will perhaps disagree with that. My personal view is insurance is for long term. It has to be for long term. Because look at this, when we talk about insurance, what are the risks we are talking about? Either you have a risk of dying too young or risk of living too old. Okay, these are the things we are talking about. On the first hand, that term cover, financial security, protection has to be there. On the other hand, how do you ensure that peace of mind is there when somebody lives for too long? And that is where guaranteed products will play in our view, pivotal role. And that is why we chose that strategy many years ago. And frankly, for us, it has done a lot of good. It has done a lot of good to our customers. Okay. Look at the rate of interest, for example. I mean, how do you predict that? There are cycles where the rate of interest will be attractive. There will be cycles, the rate of interest will be quite low. Yeah, I mean, you don't have a choice. I mean, you can't predict all these things. But definitely, I think, I'll come back to those two things. One, once we think long term, definitely peace of mind is very important. Then you are addressing that risk of many volatilities that may happen in the future. You can't predict those global events, even domestic events, okay? Volatilities and risks related to life. So that income stream is very important. I mean, those, just to highlight, whole life plans. I mean, look at this, wonderful. As long as I'm living, that income will flow in. If I'm not there, my spouse will get the income. If she's not there, the nominee will get the income. That addresses a very critical need. So that is where I feel that, you know, from our perspective, we have been very clear in terms of our approach is very conservative. As I told you, we deal with self-employed customers. In fact, 90% plus, more than 90% of the businesses in India are self-employed businesses, right? So we are right in the middle of the storm. And that's where we feel that that approach which is conservative as a bank and choosing this path of simplicity, non-par, and look at this, all those things will happen. So we've kept it very simple, frankly, Pooja. And that's where I think it is working quite well for us.
Well, very heartening to hear that. And a similar question to you, Vikram, because, you know, from your purview, you're essentially planning for that first-time jobber that's perhaps just trying to save a corpus, right? Or that mid-aged, mid-level professional that now has family responsibilities, or perhaps kind of that, you know, sunset year customer that's eagerly eyeing retirement. So how do you design your product portfolio and your basket of solutions such that it makes sense to everyone under the sun?
Sure. I think, you know, we have different products like I mentioned, but even if you look at a particular product category like non-par, okay, I think, like I said, the product has been really made very flexible. So if you were to take an example of a young professional, just started his career, wants to build a corpus, wants protection, I think for protection, like Pankaj mentioned, at a very nominal premium, he can buy a term plan. Obviously, that helps, you know, ensure that he has a reasonable cover. Or he can address that by buying a non-par product, because it also gives him largely 10x of his premium as his cover. And then he can start small and keep building it, you know. Like I said, there is flexibility of, you know, taking another policy or increasing his premium in terms of the contribution that he has every year. So what essentially is required at that age is you know, to inculcate the habit of saving, which today is not there in the, you know, we've seen times change, and today the Gen Z and all, I think the last thing on their mind is savings. I think everybody, gratification generation. Yeah, everybody kind of lives beyond their means. Also, we've seen that, you know, with credit cards outstanding being at record highs. So that culture change is definitely there between maybe us as a generation and the Gen Z. And that is where I think this aspect of, if you get into a life insurance policy, automatically you tend to save. So that addresses their needs, and they can start small. They can take a, yes, with I agree with Pankaj that insurance is largely a long-term product, but there are products of 10 years, 12 years also that that one can buy, and it can go up to 30, 40 years as well. So depending on a person's choice, he can choose. For the middle-aged guys, typically there are a lot of responsibility, like you said. There would be milestones that they're looking forward to, children's education, starting up a business, an event in the family, you want a family holiday. And that is where, again, our non-par products give you cash flows at the desired time. You can, design it that way. So your large, needs in terms of goal-based expenses can be really taken care of by planning your and customizing your product. And for the people who are looking forward to retirement, I think all of us know that the earlier you save, the better it is, because that helps your money grow faster. But typically, people think about retirement at 40, 45, 50, and that's when it starts really hitting you and you start worrying. But what we've done with our non-par products is that we have structured cash flows, and like Pankaj said, we have some products which give you, after a particular, say if I am 45 today and I can probably pay premium for the next 10, 15 years. I can pay premium for 10, 15 years, and after 15 years, I can start those cash flows. And those cash flows can, be for the next 20, 30, 40 years. And that kind of gives me an income stream like an annuity. What annuity effectively does also is you build a corpus, and then, it starts paying you out. And then in this non-par product also, you can choose the cash flow, and that cash flow is guaranteed. And also it addresses this reinvestment risk, because like Pankaj mentioned, today the yield curve may be at X, tomorrow we don't know where it will go, right? But when you get into this policy, and when the policy is issued, you exactly know what is the cash flow you will get for the next 20, 30, 40 years, despite wherever the interest rate goes. And there are not too many products in the market which offer you long-term guarantees. I mean, at best, if you go to a bank for an FD, it may be 5, 7 or 10 years at max. But here, say in this example that I took at 45, if somebody takes a plan and the cash flows were to start at 60, and I want the cash flow the next 20, 25 years, we know as we develop as a country, theoretically speaking, the interest rates will soften, right? But nobody can guarantee anything, but at least your payout, your cash flow is guaranteed, which brings in so much predictability to your life, because you know exactly you invested money, whatever happens, this is the sum that I'm going to get every year. And that really helps you.
All right, now by way of closing comments, and I'll pose this question to both of you. I'll start with you, Pankaj. Look, when we talk about a Viksit Bharat, a huge cornerstone or tenet to that vision is insurance for all by the year 2047. Okay, what's it going to take to make that vision a reality?
Look, these are exciting times, no doubt about that. Okay, economy is growing. Look at the volatility which is happening across the Western world, be it Europe, be it the rest of the world. Right. I mean, everybody is looking at India. So that is one part. Sure. We have an economy which is hugely internal consumption oriented. That is another part. Income levels are growing. The way I see this is a lot of initiatives already taken by the government. You talk about, for example, PMJJBY, Jeevan Jyoti Bima Yojana. I mean, that is such a phenomenal scheme for people who really need it. I mean, they need it as of yesterday. So that is one area where we as bank, as distributors, as manufacturers, we can play and we are trying our best to do that role. Second is insurance for all by 2047. Why it is a 100% doable thing. Look at the revolution on the digital side. Right. I mean, imagine, I'll give you one more example if you have time. Please. Before COVID-19, Pooja, if I had asked you, do you want to do a transaction on your mobile? Probably you would have declined. Okay, everybody preferred cash. Sure. Cash was the king. Sure. I mean, I remember conversations where we were engaging with HNI customers and we were pushing the whole UPI digital agenda. It was so difficult. Sure. I mean, nature, or if I may say, that COVID-19 period did it for us.
What a catalyst.
So that digital empowerment, sure, we are one of the best on UPI across the globe. Sure. It is an opportunity for us to replicate the same on insurance distribution, micro premiums, right? How do we reach the last mile? Right. If a vegetable vendor through UPI can offer, can sell the vegetables, it can happen for insurance also. Why not?
Well, Vikram, do you share the same optimism? Because clearly, when it comes to insurance penetration in this country, there is a bit of an urban-rural divide, so to speak. So when you think about a Viksit Bharat and insurance for all by the year 2047, what's it going to take?
So yes, I think just to add to what Pankaj said, I think we've taken a lot of steps on this in this direction, to be a part of this vision that IRDA has. Of insurance for all by 2047. So what we effectively started doing.
Regulatory Development Authority.
Yeah.
So since we're throwing acronyms around for the benefit of our viewer.
Yeah. So what we've started doing since the last couple of years, if you look at private life insurance, they were largely concentrated in large markets, right? The top 10, 15, cities, metros and cities. What we've started doing is consciously we started building our distribution in tier 2, tier 3, tier 4. Right. How are we doing this? One is looking at new branches coming in from there, looking at, we have distribution, various distribution channels. So on one hand, we're looking at building our agency force there. On the other hand, we are privileged to have 300 plus, partners. And while if you look at insurance companies, most insurance companies have anywhere between 500 to 700 of their own branches. I'm talking about HDFC Life branches. Sure. But with partner network, that number just multiplies, right, because we have 300 plus partners, and imagine the reach our partners have. Sure. So what we're trying to do is, given that there was concentration for the last 25 years, in the top cities, we are going to increasing our footprint in tier 2, tier 3. And just to share with you some statistics, last year alone, 70% of our business came from tier 2, tier 3, 70% of the new business, sure, right? And while there are nuances in terms of how we see, customers in the metros and the tier 2, tier 3, but there is a difference, but it's not very, very stark. Okay, in terms of my ticket size, yes, the ticket size is slightly lower, but not very low, right? If you look at persistency is when the customer pays the renewal premium. Yeah. I think those numbers are also there. I think mortality variations we have been observing. I think it's early days for us, but definitely, as you go deeper, you will probably see higher level of mortality because of consciousness on health, on medical infrastructure, etc. I think a lot of our even marketing efforts are in that direction. We have done a lot of regional campaigns now, regional language campaigns. We are looking at how we can, have marketing collaterals in regional language, forms in regional language, verification calls in regional languages.
Part of the simplification.
Yeah, simplification process. Because if we are to really achieve this vision of insurance for all by 2047, I think that is the market which we have to really cover. We have to reach that last mile to ensure that you have reached there and you have the relevant products. Okay, products work here may not be necessarily the right ones there. You would, like Pankaj said, you want to start with micro products. You want to start with small savings. So some of these are steps that are already being worked upon, and I think it will only build. We have some time to go till we reach 2047. I think most of us are aligned with this thought of the regulator and the government. And I think there is a lot of effort that the insurance companies will do, and with partners like DCB Bank, I am sure we should reach and we should participate and contribute significantly to this objective.
A bit of a long roadmap lies ahead,
yeah,
but I think conversations like this make for a critical first step. That said, Vikram and Pankaj, thank you so much for joining us on this special episode of Life Sessions. And we wish you and your teams all the continued success.
Thank you, Pooja. Thank
Thank
you for
you.
having us, and I think it was a great interaction. Thank you.
Thank you, Pooja. Yeah, good to have this conversation. Pleasure.
And thank you for joining us on this episode of Life Sessions, presented by HDFC Life in partnership with ET Now. Our discussion today highlighted how insurance is more than just a policy. It's a promise of protection and a partner for life's milestones. From supporting MSMEs through unpredictable cycles to helping families and individuals plan with certainty, the role of guaranteed return products and innovative solutions is becoming increasingly important. And as India moves towards the vision of insurance for all by 2047, the combined efforts of banks and insurers will be key to making financial protection accessible, inclusive, and personalized for every household. Until next time, do remember, financial security isn't just about wealth. It's about preparing for life's uncertainties and securing peace of mind for you and your loved ones.